Welcome to Intelligence Gateway.
Hello, today we are going to start a course, which is Financial Analysis, in which we are going to learn Introduction to Financial Analysis. Introduction to Financial Analysis. Financial analysis is the process of evaluating a company's financial performance. It involves analyzing financial statements and other financial data to make informed decisions. The goal of financial analysis is to assess a company's financial health and make recommendations for improvement. Financial Statement Analysis Process 1. List down the purpose of analysis. 2. Collect relevant data. Financial statements. Discussion with stakeholders. 3. Process data. Adjusted financial statements. Common size statements. Ratioing graphs for analyze and interpret data. 5. Develop conclusions and recommendations. 6. Review and revise recommendations. Importance of financial analysis. Financial analysis helps investors make informed decisions about whether to invest in a company or not. It helps companies identify areas of improvement and make strategic decisions. It provides insight into a company's financial health and its ability to meet its obligations. Importance of financial statement analysis. 1. Holding of share. Provides meaningful information for shareholder decisions. 2. Decisions and plans. Provides meaningful information for the company's management in making decisions. 3. Extension of credit. Provides information to creditors for decision on granting loans and demanding levels of interest for investment decision. Provides information for investors whether to invest in a company or not. Financial statements are reports that summarize a company's financial performance. The three main financial statements are the income statement, balance sheet, and cash flow statement. Each statement provides different information about a company's financial performance. Financial statements provide a comprehensive overview of a company's financial performance and position. They include the income statement, balance sheet, and cash flow statement. These statements help stakeholders evaluate the profitability, liquidity, and solvency of a business by analyzing key financial ratios and trends. Investors, creditors, and management can make informed decisions about the company's viability and potential for growth. Overall, financial statements serve as essential tools for assessing the financial health of an organization and guiding strategic decision-making. Income statement. The income statement shows a company's revenues, expenses, and net income over a specific period. It helps investors and analysts understand a company's profitability. The income statement is also known as the profit and loss statement. The income statement summarizes a company's revenues, expenses, and net income or loss for a specific period. It provides valuable insights into a company's profitability and financial performance. By analyzing the income statement, stakeholders can determine the company's ability to generate consistent revenues, control expenses, and ultimately generate profit. Key metrics such as gross profit margin, operating profit margin, and net profit margin help evaluate the company's operational efficiency and profitability. The income statement is crucial for assessing the financial health of a business and making informed decisions regarding investments, pricing strategies, and cost management. Balance sheet. The balance sheet shows a company's assets, liabilities, and equity at a specific point in time. It helps investors and analysts understand a company's financial position. The balance sheet is also known as the statement of financial position. The balance sheet is a financial statement that provides a snapshot of a company's financial position at a specific point in time. It presents the company's assets, liabilities, and shareholders' equity. The main purpose of the balance sheet is to show the company's overall financial health, including its ability to meet its financial obligations, its level of debt, and the ownership value. By analyzing the balance sheet, investors, analysts, and stakeholders can assess the company's solvency, liquidity, and profitability. it is an essential tool for decision-making and evaluating the financial stability and performance of a business. Cash flow statement. The cash flow statement shows a company's cash inflows and outflows over a specific period. It helps investors and analysts understand a company's liquidity and ability to generate cash. The cash flow statement is also known as the statement of cash flows. The cash flow statement is a financial statement that provides information about a company's cash inflows and outflows during a specific period. It helps to track the cash generated from operating activities, investing activities, and financing activities. The main purpose of the cash flow statement is to provide insights into the company's ability to generate cash and its cash management practices. By analyzing the cash flow statement, investors, analysts, and stakeholders can assess the company's liquidity, cash flow trends, and its ability to meet financial obligations. It is a valuable tool for understanding the cash position of a business and evaluating its financial health and sustainability. Ratio analysis. Ratio analysis involves analyzing financial ratios to evaluate a company's financial performance. Ratios can be used to assess a company's liquidity, profitability, and solvency. Common ratios include the current ratio, debt-to-equity ratio, and return on equity. Ratio analysis is a powerful tool used to evaluate a company's financial performance and health. It involves calculating and analyzing various financial ratios to gain insights into different aspects of the company's operations by examining ratios such as liquidity ratios, profitability ratios, efficiency ratios, and leverage ratios. Analysts and investors can assess the company's financial strength, profitability, operational efficiency, and ability to meet its financial obligations. Ratio analysis helps in comparing a company's performance with industry benchmarks and historical data, identifying trends, and making informed decisions about investments and financial strategies. It provides a quantitative framework for evaluating the company's financial position, performance, and potential risks, aiding in effective financial planning and decision-making. Limitations of financial analysis. Financial analysis is based on historical data and may not reflect future performance. Financial statements can be manipulated or misreported. Financial analysis should be used in conjunction with other forms of analysis, such as market analysis and industry analysis. Limitations of financial analysis. Financial analysis is based on historical data and may not reflect future performance. Financial statements can be manipulated or misreported. Financial analysis should be used in conjunction with other forms of analysis, such as market analysis and industry analysis. Financial analysis has its limitations that need to be considered. Firstly, it has a limited scope as it primarily relies on historical financial data and may not fully capture the current or future performance of a company. Additionally, financial analysis is subjective, as interpretations and judgments can vary among analysts. Furthermore, financial analysis may lack timeliness as it typically reflects past data and may not reflect the most up-to-date information. Other limitations include the inability to account for non-financial factors and the potential for manipulation or distortion of financial statements. It is crucial to recognize these limitations and complement financial analysis with other qualitative and quantitative factors to make well-informed decisions. Conclusion: financial analysis is a critical component of evaluating a company's financial performance. It helps investors and companies make informed decisions and identify areas for improvement. While financial analysis has limitations, it remains an essential tool for understanding a company's.
Thanks for watching. For more information, like, comment, and subscribe our channel.